Todd, so you started to lean into this a little bit, but would you say the 60/40 then still has its place as an investment protocol?
Yeah, from Vanguard's perspective, it's live and well. Uh, like I said, we put out a few blogs around 2022 when you saw a simultaneous decline in equities and bonds, and many were saying it was dead. We were saying no, actually things are looking up. Now, at the same time, we don't think it's a one size fits all for everybody. So we kind of followed that up with because I had, for example, my sister who's 10 years younger than I am saying, should I be 60/40? I was like, no, no, you should probably be, 90 or 100% equities. So it's not a one size fits all. And just as Susan noted, there's different approaches for different client goals. So we don't propose that 60/40 is the one size fits all. But as far as that kind of baseline market participation strategy, we think, that role is enduring and it'll serve investors well for decades ahead.
Okay. Susan shared a paper with me from BlackRock, and they had a great line in it calling it a new model moment. And so I was wondering if you could expand on that and how that squares with what Todd just said.
Sure. And maybe some additional context. So, my team, a big part of what we do is sort of looking at the broader kind of peer landscape of 60/40 builders out there. So, Vanguard, BlackRock, kind of, any sort of asset manager you think of who's building a portfolio that's kind of used by an end client. And so we've collected many years of data around risk and active risk and sort of where different exposures are being taken in the portfolio. And I think one thing that we are starting to see is, a bit more of a shift into incorporating different assets exactly for the reasons that you highlighted, higher correlation between equity and fixed income. But also, I think there are elements too of, end investors wanting something different in this regime. There are a number of digital asset type products that are out there that we know younger investors are interested in. Alternatives also being, an area that I think a number of investors are interested in as well. Be it something like private equity or private credit or alternatives or infrastructure. And again, happy to talk more about that. But I think um, to your point, 60/40 isn't dead and it still works, I think, for a lot of different types of clients. But I do think there's kind of an emerging um, desire to shift to something that's maybe, 50, 30, 20 or some sort of kind of variation around the margins.